Good morning, good afternoon, everyone. Thank you for being with the EU-Asia Financial Service Dialogue again. No need for some introductory words because, as Maria said, sustainability has been with the financial sector for several years right now. However, I think we still need to address some of the to address the elephant in the room, frankly. We know that Europe has been historically doing a lot and been very engaged and very ambitious in terms of sustainability and road to net zero. However, we did see again US opting out from the Paris Agreement, which inevitably will cause some ripples not only in their hemisphere but also in Europe and here in Asia. So I'm very pleased to be able to moderate this panel, and we will try to look at what the regulatory landscape looks like in the coming months and years for both Europe and Asia in the context of new geopolitical and economic dimensions. We'll also try to look at the most probably important question right now: how transition look both here in Asia and in Europe. And to address all these questions, I'm very pleased to be joined by Nick Miller, who is Managing Director, Global Regulatory Affairs at Moody's, Luke Nelson, Head of International Sustainability at JP Morgan Chase, Shaneera Rasqué from International Regulation and Enforcement from the Security Commission of Luxembourg, Ronald Wong, Head of Sustainable Banking Development at Hong Kong Monetary Authority, Tomohiro Ishikawa, Chief Regulatory Engagement Officer at MUFG, and last but not least, by Eugene Wong, CEO from Sustainable Finance Institute Asia. So thank you all for being with us. A lot to unpick, really. So I will quickly hand over to Shaneera to talk a little bit how are things looking in Europe right now in the context of changing dynamics globally, also in the context of Europe taking a bit more pragmatic view and trying to simplify and facilitate some of the implementation of the regulations that are already in force. And what are you as a member state regulator doing to reflect on these new realities? Shaneera, over to you.
Good morning, Diana, and good morning all. Thank you for having me today, and thank you for the question. I think as a starting point, it is important to contextualize a bit the reasons for the changes you mentioned, having a more pragmatic approach and simplifying the regime. The Sustainable Finance Framework continues to put the EU in a leading role in the area. But at the same time, it is also fair to say that we have now tested the regime. And after a few years of having tested the framework, there is an acknowledgement that there are weaknesses and shortfalls that need to be fixed and that cannot be ignored. Those need to be fixed for the regime to fully deliver on the objectives. So in terms of regulatory developments, I believe the first game changer here in the EU for the investment funds will be the ESMA guidelines on fund names, using ESG or sustainability-related terms in the names that have started to apply to new funds in November last year and will start to apply to existing funds in May of this year. Just as a reminder, those guidelines are meant to specify those circumstances where the fund names operating in the ESG space might be unfair, unclear, or misleading, thereby protecting investors against greenwashing. Now, they provide with minimum standards in terms of asset allocation and exclusions for those funds. So funds will either need to comply with the new portfolio requirements or change names. From the macro studies I have seen, those guidelines will have quite an important impact on the market. Some data providers have identified around 4,000 EU funds that may fall in scope of the guidelines. And if all those funds were to keep their names, it could lead to stock divestment of approximately $40 billion, which is quite of an impact. Now, in terms of changes having more transversal impacts, as you heard from the keynote speech before, the newly appointed EU Commissioner for Financial Services expressed the intention for simplification, simplifying the sustainable finance framework, and particularly SFDR. As you may know, the EU Commission has consulted end of 2023 on the review of SFDR with the European supervisory authorities and also ESMA having published opinions on the topic. The EU platform on sustainable finance has also recently published a proposal for how to categorize products under SFDR. Importantly, in the asset management area, which is one of the biggest areas on which we are impacted here in Luxembourg in terms of sustainability, ESMA has also launched a common supervisory action on sustainability risk and disclosures in 2024, which national competent authorities have now completed. Just as a reminder, this exercise is a deep dive on how asset managers are actually complying with the sustainability-related provisions and is meant to further enhance supervisory convergence. We are now very eagerly awaiting for the ESMA report, which will also feed in the review of SFDR. Now, one topic which will keep us quite busy is the review of SFDR itself, and the direction of travel as it stands currently is to review the categorization according to Article 8 and 9 products and to have categories with minimum objective criteria to allow for a common language among stakeholders, as opposed to the regime as it stands today, where each financial market participant can have its own definition of sustainability. Contemplated categories as it stands today include sustainable, transition, and an ESG basic category. The review will also give more space to transitioning strategies, which was one of the main criticisms which was made to the current regime. Disclosures might also be simplified and cater for different investor needs. Finally, as you rightly mentioned, Diana, we are all eagerly waiting for the omnibus legislation, which will introduce, as we understand, cuts to the green reporting rules. So we are very much looking forward to the proposal of a commission, which will be published tomorrow. So you see, it will be quite a busy agenda on the ESG side. What I would like to add is that over the last years, we have witnessed and are probably still witnessing many iterations of a framework and legislation that did not necessarily fall into place. We had CSRD coming after SFDR, while we were requiring financial market participants to disclose quantitative figures on their sustainability commitments. But now revisions which do not bring the necessary clarifications create legal uncertainty, as well as undue complexity, hence undermining the credibility of the EU framework. We are very strong advocates of the fact that any review shall now be done in a spirit of resolving those issues once for all, while also mitigating market disruptions and giving due consideration to interoperability between the frameworks in different jurisdictions.
Thank you, Shaneera. That was very comprehensive indeed, what Europe is doing in terms of sorting the various initiatives that have started in the past years and now reflecting on some of the lessons that we've learned through this process. So maybe I turn now to Ronald, who is sitting in similar shoes, but in Hong Kong for the Hong Kong Monetary Authority. And since Hong Kong has been traditionally formulating and implementing policies in Asia in a very successfully translating some of the international examples and international standards into more kind of Asian context. I'm wondering, how are you reflecting on these new dynamics, both coming from the US, but also the reassessment from the European side? And what would you be doing in order to support the agenda, yet in a new context? Over to you, Ronald.
Okay. Thank you, Diana. Thanks for having me, and thank you for the question. So there have been quite a lot of headlines on the subject recently, and the discussion have been quite dynamic in various forums. So to us at HKMA, we maintain our commitment to an orderly and inclusive transition. This has been reiterated by our leadership on a number of occasions, and I've heard the same in various forums. Last October, we launched the Sustainable Finance Action Agenda, setting out our vision to further consolidate Hong Kong's position as the sustainable finance hub in the region and support the sustainable development of Asia and beyond. So as Hong Kong is the region's financial center, and many of the region's emerging markets will be impacted by climate change, we see it as an opportunity to make use of our capability and expertise to help. So when we formulate policies, we do consider the feedback from a broad set of stakeholders. So we'll look at their requirements and see, we'll look at the requirements and see if their capability will be able to meet it. And then we'll also look at the level of resources with respect for them meeting the policy requirements. So our objective is to strike a balanced approach, achieving credibility and robustness in the eyes of international investors, but we also want to make sure it's practical to our business stakeholders as well. So you mentioned Europe in your question, and Shaneera also make a very good point. Is Europe started the journey earlier than most other jurisdictions and much earlier than Asia. So their policy have been trialed and tested for a longer period of time. So I think everyone, including Hong Kong and other jurisdictions, will take reference to the lesson learned when we develop the details of our policies. And then based on the lessons learned, we'll try our best to come up with something that is fit for purpose. Thank you.
Thank you, Ronald. Indeed, Hong Kong has a very interesting role to play, and we'll explore a little bit about this a bit later. But now, going to Eugene. Eugene, you've been working with the ASEAN community of nations for a long time, and ASEAN is to an extent similar to what EU is. It's a block of nations which have very diverse economies, backgrounds, and so on and so on, but looking for similarities and how mutual objectives can be achieved together. So in the context of the new dynamics, how do you think the bloc will respond to the new realities? Would there be some reassessment of the policies in place? I know you've been involved in a lot of the work that has been trying to create some common standards for the ASEAN group, but always with the eye of connecting with Europe and the rest of the world. How do you think the policy development will go on in the ASEAN context? Over to you, Eugene.
Thank you, Diana. That's an excellent question. Actually, it's interesting you talked about how Europe and ASEAN might be similar. One major difference, of course, is that the ASEAN infrastructure and institutional arrangements are actually very different from Europe. It's held together by a charter. So in ASEAN, we have to get the 10 member states to agree on by consensus. Also, interestingly, is the diversity in the ASEAN member states, because the highest GDP per capita per annum is at $82,800 US, and the lowest is 1,100. And the average is 5,004. So you can see it's really skewed towards the lower end. In Europe, the average is 37,000. So I have to say that actually for ASEAN, the sustainability agenda, particularly the climate agenda, is extremely important, because there was a survey done by the Asian Development Bank, and 84% to 96% of those who responded said climate change is a very big issue for us. At the same time, there's going to be a huge impact to our economies. So if you look at Vietnam, for instance, we're expecting a 30% hit to the GDP, Indonesia 27%, and for the rest of ASEAN, on average, it's going to be 23% if we don't get our climate game right. So this is a very important issue to ASEAN, but because of the sort of diversity we have, we've always taken a very pragmatic approach. And this pragmatic approach pragmatic approach has been really about how we're trying to balance the reality together with the ambition. And therefore, I would say at this point that reality and ambition coming together in a marriage is equal to transition. And I mean, everyone's talked about transition, so I do want to pick up on that point later on. But it is very important for us to be able to ensure that as we try and head towards this decarbonization goal, we're not going to cause social and economic dislocation. So a lot of what Ronald has said, I fully agree with, because I think those are areas which we really have to watch out for. So transition's been a very big issue for Southeast Asia. In fact, actually, we started talking about transition back in 2016, particularly amongst the capital market regulators. Transition was a very dirty word. It was synonymous with greenwashing. We also didn't call it transition. We called it a phased approach. But today, transition is actually key. Without transition, we're not going to achieve any of our goals. What I think particularly is important, following on from what Ronald was saying, is geographic contextualization, because we have global goals, but at the same time, we have to recognize that the circumstances, the resource availability, and the starting points of different countries are very different. So if you try to apply very high global standards, you're not going to get an achievement. You're actually going to run into a lot of trouble. And I call this the paradox of ambition. Because if you are trying to have an ambition that's so high, you're going to end up actually not achieving any of it. And in fact, on the contrary, you might find yourself very much set back. So for us, it's very important that we contextualize. But in contextualizing, we also have to make sure that we retain that ambition, because you might have people who use this as a reason not to take any action. So we try and do this in a very structured approach in Southeast Asia. For instance, if you look at the ASEAN taxonomy and the ASEAN transition finance guidance, which are contextualized for our region and meant to operate together, what is very important is that while we cater to the local needs and goals, we also try and be interoperable. So the ASEAN taxonomy, for instance, at its highest tier, highest performance tier, actually benchmarks against the EU taxonomy. And what I did want to also say is that I think that we kind of need to go a step beyond interoperability now, because we're looking at the global agenda, yet we're trying to look at localized approaches. And why do we have so many localized approaches? When we first started working on the taxonomy, we had probably 10 to 20 taxonomies which were developed and under development. Today, there are 50 official taxonomies that have been developed or under development. And if you look at all the major institutions that have their own, it's because people are trying to address their own individual circumstances. So having interoperability means that taxonomies actually have the same environmental objectives. They use the same industry classification criteria. They perhaps have the same do no significant harm criteria, and maybe use the same metrics or technical screening criteria. But then how do you ensure that something that qualifies as eligible under one taxonomy is also going to be eligible under another taxonomy or considered to be equivalent? That is where we're going to get capital flow. So therefore, I think we have to move past interoperability into an equivalent space now. And that is what we would like to do. I think it's important for us globally to come together to recognize equivalence and to be able to move the agenda forward, looking at the global ambition, but at the same time enabling local contextualization. So I'll just stop there. Thank you.
Thank you, Eugene. Thank you for putting forward the point of localized approaches and the importance of actually each of us reflecting on our local circumstances. And we know that in Asia, this is particularly challenging sometimes. Also, the question of equalizing certain standards, since we cannot have completely same standards, or we cannot have interoperability between standards. So that's very important, and I know the road to this final goal is still ahead of us. So switching now a bit more towards the commercial sector, Tomo-san, you're representing International Global Asian Bank. You have to apply and you have to operate across all these different regions and jurisdictions. How do you see the regulatory landscape? in the context of actually securing investments across these different jurisdictions? And how do you think we should think about net zero nowadays, given what's happening around the world?
Sure, Diana, thank you very much. Do you hear me okay? Good, good. So I want to touch on two things, net zero, as you mentioned, but also the value or the international cooperation, given that we're talking about EU, but also Asian, how two regions can cooperate. Let me start with international cooperation, or why cooperate. If you start with the assumption that international cooperation is based on the understanding that advanced economies are doing favor to developing economies, I don't think the discussion will be productive. It's not about, doing favor. Why? Because one side will say, what is the return? We're hearing, what will be the return from financing? And the other side will probably say, it's your responsibility to do more cooperation. So I don't think it would be productive if you kind of start with the assumption that it's your responsibility, but the other side will say, what's the return from this? So I think we need to take a different approach, which as a practitioner, that's exactly what I want to suggest. So why cooperate? Why international cooperation is necessary or makes sense? Because it's economically possible, and it's economically possible. So you may know, but the Japanese government has been undertaking the scheme called Joint Credit Mechanism. This is a mechanism under the Paris Agreement, Article 6.2. What is this? It's basically, from my perspective, it's an arbitrage, right? Arbitrage because abatement in one country may be more expensive than other country. So, for example, if you think about the country like Japan, it may be more expensive to do abatement in Japan versus emerging economies like ASEAN. And we, as Diana, you mentioned, we're Asian institution. We're not just Japan focused. We have extensive footprint throughout the ASEAN. So it makes sense to do abatement or emission reduction in ASEAN rather than just focusing on Japan, because sometimes it's cheaper. So to some extent, that makes economic sense, and that I do think as a rationale for international cooperation. So international cooperation is not just about it's a responsibility, we're doing favor, etc., etc. It's about economic case or business case. How can we make sure that the private sector can help emerging economies to reduce emissions? So that's how I would think about international cooperation. So we, private finance, can certainly be part of international cooperation. So that's the first thing I wanted to mention. Second, on net zero. Question is net zero of what, right? 4 years ago, many financial institutions like MUFG and others, we committed to net zero finance emission. The question or the theory behind that was when we, the private sector, send signal to the real economy, they will also respond. So we as an entire ecosystem can transition. That I think was the theory of change, but clearly transition is not happening, right? And of course we can discuss why, whose fault, etc., etc. But I think we need to do more. But I think what we learned through this 3-4 years of journey is that finance can certainly support, enable transition, but we cannot drive transition, right? Because at the end of the day, this is about real economy, industrial energy transition that we're talking about, not just the finance emission reduction. So what does that mean? It means we shouldn't be just talking about net zero finance emission, but finance emission net zero should be viewed as a outcome or the result, not the leading indicator. So we need to redefine what net zero means. Net zero in the context of the real economy, industry, energy, rather than just finance emission. So that's my suggestion to the broader, I guess, the stakeholder in Asia, but also in the EU, that we shouldn't be just focusing on finance emission, net zero, how can we accelerate? Of course, that's important, but we should think that as an outcome. And we need to engage with the real economy, the energy, corporate, industry side, so that they accelerate the transition. We, finance, can support their transition. and we achieve net zero as a result of that. Happy to discuss what we can do more, but let me stop there. Thank you.
Thank you, Thomas. And indeed, we at the SIGMA have been one of the advocates of this kind of holistic approach. And as you mentioned, we have to transition as an ecosystem. None of us can be the sole agent of this change, which is massive. So financial sector can support, but certainly the economy as a whole and the technology that needs to be available should also be there for us to be able to move on collectively. So let me turn now to Luke. Luke, you have the benefit of being the representing a US bank, which nowadays is it's a unique position. We agreed that you'll be kind enough to share with us some of your thoughts around the changing role internationally that US will be playing, at least in the near future, and how you as a global but still headquartered in the US bank are thinking about net zero transition, and what is your strategy really to go forward with this, given what has been done so far and what is ahead of us. Over to you, Luke.
Thanks, and first of all, thanks very much for the opportunity to join the panel. Really great to hear the perspectives shared so far. So you're absolutely right, Diana. We are a US headquartered financial institution, but we're present in over 100 countries. So we have to navigate a really complex global climate and sustainability landscape, and that is changing rapidly. So we see that through the changing regulatory environment. And the changes that are coming through from last year. So, I mean, we had the biggest election year in history, and we're beginning to see the impact that the outcomes from all those different elections are having on the sustainability related regulatory environment across all different jurisdictions, and particularly US, EMEA, and Asia Pacific. So in the US, we are in a period, I think it's fair to say, of relative uncertainty as we work to understand the new administration's expectations and consider how these will impact the regulatory agenda. And I think it's fair to say that while we expect a significant shift in the US government approach to climate more broadly, there is significant Inflation Reduction Act investment that's already underway. And the pace of the US energy transition will also continue to be influenced by things like the broader macroeconomic conditions, commodity prices, consumer sentiment, and individual corporate strategy in the private sector. So I think it's important to kind of think about this sort of range of factors. So we do expect the new Trump administration to prioritize US energy independence through the expansion of oil and gas activities. Although the administration's policies might support an all of the above approach to energy supply, particularly given rising energy demand from things like AI and also considering geopolitical dynamics. So we're still sort of seeing how all this begins to settle. I think one emerging trend is the increasing complexity of state-level regulatory activity in the US. So particularly in Democrat-led states like California, where we see the lawmakers pursuing their own climate disclosure laws. So a complex picture in the US. And then, you know, as we think about our activities in EMEA, which is an important part of the world for us, it's where I'm based. As colleagues have said, we're expecting to hear more about the omnibus package, and we think that really represents a good opportunity for sensible and needed reform. So you know, I think over time it's pretty clear that the framework in Europe has become too complex, and it's placing a disproportionate burden on companies and potentially harming competitiveness. So I think that the simplification package is a big opportunity to remove some of the barriers that exist in the EU, and we really are hopeful that policymakers are going to be ambitious and prioritise the quality, not quantity of information. And then just briefly on Asia Pacific, I think we're present in many different locations in that part of the world, and we see a pretty fragmented regulatory environment with significant differences, of course, contextually in economic development and net zero countries across different countries. So I think the proliferation of different taxonomies in Asia Pacific presents a challenge, and we also very much welcome the efforts underway to align those frameworks and reduce complexity. I think it is really important, and this is the last thing I'll mention, that within all of that sort of growing picture of complexity globally across public policy, across regulation, we don't expect changes in sustainability-related financial regulatory requirements to impact our climate finance goals or to impact our business strategy. So, what we've really seen is so far increases in clean energy investment globally. They've really been the result of changes in real economic policy. So, echoing a lot of what Tomo was just saying, it's the changes in the real economy that are going to drive change here, not financial regulation. So in the US, we saw a significant increase in clean energy investment due to the Inflation Reduction Act and its policy incentives that really shifted the economics of clean energy in the US. And I think meaningful progress on the transition is not going to come from policy that impacts the financial sector, but it's going to be the policy that shifts the economics of clean energy. So I think we really need to see governments leading by setting the necessary enabling regulatory frameworks and policy incentives to make the transition more economically viable and more easily achievable for businesses across the whole economy.
Thank you very much, Luke. We'll come back to the business case of net zero investments and clean energy investments in a minute. You mentioned something important, though, the quality of information and the quality of data. And I have a question to Nick, who is coming from Moody's, and it's probably one of our panelists that has the biggest kind of oversight with respect to data and information that is coming as a result of all these numerous regulations, disclosure requirements, voluntary disclosures, and so on and so on. So, Nick, would you like to tell us a bit about how do you see the impact of regulations on your side of this story? How much existing regulations have helped you collect and analyze meaningful data for the sake of use from all the stakeholders, and how much do you expect this new regulatory environment to support, or rather not, the further development of the data sets that we need to make meaningful investment decisions? Over to you, Nick.
Sure. Thanks, Dana, and thanks for the invitation. Great to be here. I mean, absolutely. I think, as Luke said, I think the transition will be inspired and driven by industry, and we're certainly seeing that. We're expecting global sustainable bond issuance to remain flat, give or take, this year at around 1 trillion, same as last year. I think certainly, you can see a push from industry to decarbonize their supply chains and manage their transition. But the regulatory and policy environment is, of course, critical to your point, Diana, and I think we are seeing that certainly in Asia. Ronald mentioned the Hong Kong Sustainable Finance Action Agenda, which isn't just regulatory, it's a cross-government effort. Similar efforts in Singapore and Australia to ensure that the environment for issuing sustainable debt is as conducive as it can be, and also promoting wider transition, of course. I mean, I think in terms of the data, I mean, obviously, we've discussed a lot the omnibus piece, which we're expecting tomorrow. I do think that reflects a concern about getting the data right and making sure that we're actually getting those data fields that are actually essential for transition and for greening finance and for financing green, but making sure we're doing that in a very considered and efficient way. So we'll see what comes out tomorrow. I think on the taxonomy piece, that's something we're obviously following with great interest. We're tracking over 53 taxonomies globally at the moment, and interestingly, in the recent sets of updates that we're observing, I think an increased focus on pursuing and supporting transition there. I think that's welcome. And also on interoperability, and I think that is, as Eugene said, it's a good aim and aspiration to have, but perhaps not necessarily going to solve all of the problems. But again, we would point to significant efforts being taken across Asia in particular, the ASEAN taxonomy for sustainable finance, trying to align with global taxonomies. And then I think on the corporate reporting piece, there's obviously a question about double materiality now. We'll see what comes out with CSRD and alignment with ISSB over time. But I do think it is absolutely critical to get the data right. We do need to see, we want to see data that is meaningful and useful and actionable. And of course, efforts to support that, I think, are really important from the regulators. And one area that's close to our heart, perhaps, is the ESG ratings space, where we have seen different codes of conduct coming out from the UK, ICMA, from Hong Kong, Singapore, elsewhere. I think it would be good to see those coalescing into a single code over time, if that's possible. And of course, we would flag that the EU and UK, alongside India, moving towards more formal regulation. So I think, look, there's a lot to be positive about. There's a lot to be optimistic about. But I do think continued focus and making sure that we're really putting our efforts into areas where we'll get meaningful data and meaningful insights is going to be really important.
Thank you so much, Nick. So we are time constrained, but we agree that we will address the at least one aspect of the transition, and maybe I go back to Shaneera and ask about the role that you see in supporting the transition agenda. Over to you, Shaneera.
Yeah, well, if you look at our mission statement at the CSF, our supervision is being exercised with two main objectives, which are investor protection and financial stability. So ESG supervision and supporting the transition agenda, of course, being conducted with those two objectives. But coming back to your question, there are three items that come to my mind more specifically. The first one is to have a regulatory framework with clear requirements, which does not hinder innovation and allows entities to propose their ESG products to investors. The second one is ensuring that our supervised entities comply with the sustainability-related provisions that apply to them. And of course, the third one, which is very close to our heart, is investor education. Now, if we talk a bit about having a regulatory framework, setting out clear regulatory requirements, I think this is, and if not the essential element of a framework. As I already mentioned before, the current framework in the EU has shortfalls and weaknesses that cannot be ignored and that need to be fixed for the regime to be fully effective. And those, unfortunately, particularly relate to SFDR, which I consider to be the key regulation of a framework, as it's a disclosure regulation which allows to build the bridge between the real economy's financing need and investors looking for green or greener investment opportunities. Unfortunately, since the entry into force of SFDR, we have been navigating rules that are still subject to interpretations and which have unfortunately led to different applications in member states and thus to market fragmentation. So we need to have a robust framework that allows for supervisory convergence, which does not create undue complexities on stakeholders. In this spirit, we at the CSF have consistently communicated when possible on our expectations to the market with dedicated communiques, FAQs, thematic reviews, webinars, bilateral exchanges with entities. We have also regularly raised questions to the European supervisory authorities where we thought that common interpretations among member states were needed. The second pillar I wanted to mention is that we also need to make sure as a regulator that the promises we make to our investors are being kept, which can only contribute to building and maintaining investor trust in the regime. Hence, it is our role to ensure that our entities comply with the sustainability rules that apply to them. So the CSF conducts this supervision on an off-site and on-site basis on a risk-based approach. Our priorities, our ESG priorities have been communicated on our website and draw upon the EU supervisory framework in a spirit of application of common rules across member states. So in the asset management area, they align to the ESMA supervisory briefing on sustainability risk and disclosures. So basically, it means that we will check that the investment managers have appropriate governance to manage the ESG products. We will check the compliance of pre-contractual and periodic disclosures with the regulatory provisions, the consistency of the marketing communication with fund documentation, and also with verified portfolio compositions. And thirdly, supporting the transition means that we also need to have investors who are aware of the availability of the ESG products, understand them, understand the framework and the risks that they might pose. Since the entry into force of SFDR, the CSSF has been actively engaging in this area with several campaigns on sustainable products, the latest ones, which have been focusing on greenwashing and green finance, have been launched in November 2024. So all in all, I believe those are the main pillars where the regulator can contribute to easing the green transition. Thank you.
Thank you, Shaneera. A very complex framework. So I hope all investors understand it and take benefit of it. But I'm sure, as you mentioned, investor education is one of the precursors of the success of the regulatory framework. So thank you for sharing this. Ronald, if I may turn to you, Hong Kong, given Hong Kong's role as a financial hub in Asia, between China, the rest of the world, but also within Asian countries and beyond, how do you plan to facilitate this transition agenda? Over to you.
Yeah, thanks for the question. So, Hong Kong Monetary Authority, HKMA, is part of the Green and Sustainable Finance Cross-Agency Steering Group. The steering group is co-chaired by HKMA and the SFC, the Securities Futures Commission, and joined by relevant government bureaus and departments such as the Financial Services and Treasury Bureau. So recently, we had a steering group meeting, and then it was reiterated that one of the key priorities to reinforce Hong Kong's role as a leading sustainable and transition finance hub. So on this front, we are working on a couple of near-term priorities. So, as Nick mentioned, basically a lot of the taxonomy in the region actually are incorporating transition elements. So in Hong Kong, we are expanding the Hong Kong taxonomy to include transition elements and add new sustainable activities. And we also include additional climate objective, which is climate adaptation. And then in addition to taxonomy, we are also developing an operational guidance for practicing transition finance in selected sectors, covering different types of financings. It will provide a set of practical guidelines on top of the existing framework for financial institutions to use. And then in addition to that, we are setting up a transition finance knowledge hub to provide easy and open access of transition finance information for the public. So our works on these have been progressing well, and we have been engaging the industry and a broad set of stakeholders to seek inputs from them. So all of these are actually enabling tools available for use by local, regional, and international financial institutions. They can use these tools to scale up sustainable and transition capital flows across the region and globally.
Thank you, Ronald. Yes, as we're based in Hong Kong, we are very close to all the initiatives that HKMA and other stakeholders are doing, but also the connectivity with mainland China and the rest of Southeast Asia, which brings me to Eugene. And Eugene, if I may ask you, all supply chains nowadays cross Southeast Asia once or multiple times. So in the context of this part of the world being so important in terms of everything that we consume, how do you think we shall think about transition, and how do you think the ASEAN bloc in particular could play its role in the global transition, but also for the ASEAN member states? Over to you.
Thank you, Diana. So I want to circle back and follow on Tomo-san's point, because I think it's really important for us to recognize that it is important for us to have a financial sector that's mutually reinforcing with the real economy to promote sustainability. So we need to promote that virtuous cycle. And indeed, it is the role of the financial sector to be able to spur the correct allocation of capital. And that is very vital. So the real economy must respond in the same way to those signals from the financial sector. The second is because financial flows, and indeed you just mentioned, Diana, the supply chain is as global as it gets. We really have to make sure that there's international cooperation, because if we're all coming up with different perspectives, then we're all just creating fragmentation, which is causing more confusion, more bottlenecks, and more roadblocks. So ASEAN actually, as I mentioned just now, looks at transition very seriously, because we are trying to implement a just, orderly, and also affordable transition in ASEAN. And in fact, the ASEAN sustainable finance ecosystem is built around 3 pillars, the first of which enables us to speak a common language, which is the taxonomy. The second, which enables us to be able to make this journey, the carbonization journey, with minimal social and economic dislocations, that's transition approaches. And the third is for us to be able to be publicly accountable to stakeholders, and also to assist in informed decision-making by having the right and accurate disclosures. So these are the things we're trying to do. Now, we have 10 member states. Obviously, every member state is going to have a slightly different perspective and different priorities and national agendas, but what we try and do is to unify them under unifying frameworks. So if you look at the ASEAN taxonomy, which is the first regional transition taxonomy, it unifies the various individual member state taxonomies. The ASEAN Transition Finance Guidance tries to create a framework which provides our member states the ability to act in a very concerted manner. Now, I wanted to point out that when we issued the ASEAN Transition Finance version 1 in October 2023, we undertook a year of consultations before version 2 was actually released. And we learned a few lessons because we asked a few questions to the market. The first is, do you think that we should have a definition in the Transition Finance Guidance for transition? And actually the answer was no. I mean, there are a lot of discussions about it, but transitions are quite bespoke. You cannot have one single definition. You can have a common approach, but it's very difficult to have a single definition. The second is that many of the approaches, as I mentioned just now, are global. So if you look at the decarbonization pathways or the net zero pathways, a lot of them are very globally focused. So in order for us to be able to support the real economy, we need to be able to augment the global pathways for local contextualization and nuances. The third is that there needs to be credibility, and we did ask people, do you want a certification to create asset class? And they said no, but because we don't have a single definition. But I tell you what, having some sort of verification is really, really helpful, particularly in the capital markets where it's very transactional. So that will help the flow of capital. The third is having tiers, because I talked about transition. We talked about transition just now, but an inclusive transition, I think that's very important. Ronald talked about the inclusive transition. Having a 1.5 degree target, also as Tomo was mentioning, is a universal target, but it may not work for individual countries. So the ASEAN Transition Finance Guidance, like the ASEAN Taxonomy, has tiers. We have a 1.5 degree gold standard, we have a well below 2 degree, and we have a progressing to make sure that we're inclusive and we try and get everyone along the journey. The fifth is actually international operability. The ASEAN Transition Finance Guidance benchmarks against 6 global references, and we make sure that all the key elements are there. And importantly, when we put it out, we ask the real economy, does this help you create a transition plan? And the answer is yes. So that was probably the most important element, because we can't get the real economy going, we can't move ourselves. I'll just stop there because we're short of time. Thank you, Diana.
Thank you, Eugene. So you mentioned something important, the allocation of capital and the role of financial markets in this. So I was going to ask Tomo-san if you want to share your observations about the capital flows that are crossing borders right now, and how do you see the status of capital flows to emerging economies? Over to you, Tomo-san.
Sure. Thank you. So people talk about huge finance gap for Asia, right? Some people say it's $1 trillion, 2 trillion, 3, it's a big number for on an annual basis that we know. However, when I visit, I was in India last week and also Jakarta. When I visit the actual, our clients in these markets, they tell us that real projects are not necessarily there. Of course, in the next 5-10 years, they know the huge financing is necessary. However, it's not that the projects are really there. So, Eugene, I really like your approach of this collect allocation capital. Of course, if you're an asset manager, you may be able to do that. You want to allocate some capital to green bonds, et cetera, et cetera. We as a bank, we compete, right? And we need to identify bankable projects. So what I hope to see is more pipeline, more government support. As I said earlier, it's about industrial transition, energy transition, and banks or financial institution cannot drive this, right? It's a local government, it's a local corporates, and we, as a financier, we need to work together and address this huge financing gap. And again, huge finance gap cannot be addressed by one check, right? We need to work on transaction by transaction, one by one. And hopefully, as a result, we'll be able to address this huge finance gap in the next 5-10 years. So what I would hope to see is that we need to create a capital market in ASEAN. I know Eugene's working hard on this with taxonomy and the disclosure. But at the end of the day, this is about the market creation. We need to foster capital market so that the more investors, more banks are willing to finance the transition. So all the regulations are, I guess, now in place, but it's also the transactions, the pipelines, right? And that's not something we, the finance people, can create. It's the real economy. So I think you need both supply and demand side to work together rather than just supply side saying, how can we create this, blah, 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 because you need a corporate energy industry side to engage, and we work together to create a capital flow. Thank you.
Thank you, Thomason. Absolutely, we need everybody to be on board. So, Luke, what other approaches do you see in promoting sustainable transition finance, and also phasing out of coal? It's something very, very topical in Asia. And we know that this is a region with rapidly increasing energy needs, which are really difficult to be met only with new renewable capacity. And unfortunately, we still see coal power plants being built, and we haven't yet started decommissioning those that have several decades of life. So how do you see your role, and how can you support this side of the story? Over to you, Luke.
Sure. And look, I'll build on a lot of what Tomo was saying. I think the key thing that needs to happen here when we're thinking about transition finance is what's happening on the flow of those projects to finance. So I think it's really helpful to start by being clear about what we're solving for here, and it's not a lack of capital. So lack of capital is not what's sort of impeding the realization of transition. And so I think it's helpful to think about what we're solving for, and the economics need to make sense at a transition investment level in the real economy before capital can really flow at scale. So let me just give some examples of kind of some of the issues that we see on a global basis. So I think many projects that we see as a financier are not commercially viable because there's no clarity on demand. So I think often while investors are clear on the different transition pathways for specific sectors, there's often a lack of clarity when it comes to what's going to be commercially viable in a specific country, in a specific region, because there's not the clear demand signal there. So it's very difficult, for example, for an energy major to invest in a new technology like green ammonia if there's no clarity on the demand side and the willingness of companies to offer long-term offtake agreements. So, if you've got the shipping industry, for example, again, and a lack of clarity there on whether shipping is going to opt for green ammonia versus electrification and how that's going to play out, that uncertainty makes the investment very difficult to justify from a risk return perspective. So that's one of the types of issues that we see. We also see globally less willingness to pay a premium for low carbon alternatives in less profitable sectors. So some of the highest emitting sectors globally generate relatively little profitability relative to the amount of carbon they emit. So as a consequence, the economic incentives to pay for lower carbon solutions are low. And in such cases, there's a good case for public intervention to remove some of the barriers for investment. So again, just to bring that to life, cement is a sector where the technology to decarbonize production is not yet commercially viable at scale. So it's difficult for that sector to really think about profitability of those investments, as there's no support to make that commercially viable. So that's going to have an impact in terms of bankability. So it's not lack of capital, it's the economics that must make sense. So how do we think about sort of how this should be addressed and fixed? I think we're pretty clear that policymakers can do a lot here. So policymakers can do a lot by driving demand signals around market size and addressing that sort of uncertainty that I talked about around sort of demand for newer, cleaner solutions in heavy emitting sectors, along with sort of targeted use of public balance sheet for the mechanisms that help to mitigate the risk for financing some of those more challenging sectors and new technologies. So there we're looking at levers like things like mandates for particular sectors, product standards, procurement requirements. And I think it's those things. And then for banks, additional measures to help mitigate risks. So offtake contracts, revenue certainty mechanisms, those things will often be needed. And so where we've seen success globally, there's also the role of first loss guarantees and the use, as I said, of targeted public balance sheets. So one example that often gets talked about, but I think it is a good example, is H2 green steel in Europe. So H2 green steel produces steel with 95% less carbon than traditional blast furnace technology. It's been able to raise 3.5 billion euros in senior debt and up to 600 million euros in junior debt, with the crucial support of public finance. So there was a 250 million euro grant under the EU Innovation Funds. Export credit agencies also played a role there to help de-risk the project for private lenders, and there was support from the European Investment Bank. So I think that example shows how public finance can be used to mobilize larger quantities of private finance to support a really innovative new green technology. So I think it's the combination of thinking about the policy signals and consistent, stable policy measures, as well as the targeted use of public balance sheet. And I think, as we think about this, whether it's in Europe, in Asia, or elsewhere, policy stability is also something that's really important for us as a bank and our clients as they're sort of seeking to look at sort of new ways to decarbonize operations. I think all of that intervention that I've just talked about is necessary, but hopefully as technologies needed for the transition become increasingly commercially viable, they'll be able to compete against existing technologies. We're seeing that in some sectors already. And then we'll be able to sort of dial down the level of intervention that's required. But I think until then, we have to see that policymaker focus on enabling the real economy drivers of transition. You mentioned coal phase out. I think that is something that we are actively exploring and interested in. I think the potential is exciting. Clearly, that will require, as I've just described, for transition finance more broadly, partnership across a range of different stakeholder groups to be successful. I think that's a really common theme, bringing different groups together, thinking about what are the individual policy interventions that are required to make this viable.
Thank you so much, Luke. It's really a shame that we don't have more time to go into some of these examples, which are super fascinating, and I'm sure our guests would benefit to understand a little bit how some of these pilots can be scaled, but we'll leave this for another time. So we're already kind of over our 1 hour allocated, and for Asia we're quite late, so we'll try to wrap up very quick. So Nick, final question to you. How do you see the landscape right now? Where do you see instruments being used? How do you see supply chains decarbonizing? A snapshot of current reality. Over to you.
Thanks, Anna. I will be very quick and just mention one point, which is that I mentioned the level of issuance we're expecting globally. Certainly Asia is a significant contributor to that, and we're expecting that to continue. It's the second largest issuer of sustainable debt in the world. So very interesting times for Asia, and we agree, with Luke, that there's a lot of capital to be mobilized. An interesting area we're seeing more of now, I think, already in sustainable bonds, where we've given second-party opinions on, is a real focus on transition. So climate mitigation measures, renewable energy efficiency, clean transportation. That's already there in the mix, I think, but we are also now seeing interest in issuing transition bonds, so bonds specifically designed to finance the transition, support corporates decarbonizing. We're expecting more of those coming this year. Obviously it's a relatively novel asset class, and there will be concerns over greenwashing again, which we've talked about, I think, in this panel and others. So it's going to need to be really really clear what the aims of the capital is, what are the projects that is designed to finance and so forth, and how transparent is it, and are there roles for third parties to come in and oversee and to verify the claims that are being made. So really interesting time for this. Europe's obviously gone down a particular route with the EU green bond approach. Whether we'll see that in Asia remains to be seen. But interesting times where we're expecting more transition label bonds, particularly coming from Japan, but also Singapore, Australia, mainland China, and others as the market evolves.
Thank you so much, Nick. Thank you, everyone. That was a really very interesting discussion. I hope our guests did enjoy it. So thank you again for being with us.